Well, meantime, startup Databricks announcing some key milestones today, including a $4 billion revenue run rate in Q2. That's up 50% year over year. Its AI products crossing above $1 billion in revenue run rate as well. Plus, the company closing a fresh round of funding, $1 billion worth of funding at a valuation of more than $100 billion. But some investors are beginning to question some of the AI adoption thesis. Apollo's Torsten Slok pointing out that AI adoption among large firms is actually declining. That's according to U.S. Census Bureau data. Joining us now in a first on CNBC interview is Databricks co-founder and CEO Ali Ghodsi. Ali, it's great to have you on the show. Welcome.
Thank you. Glad to be here.
So let's start right there with the fact that you've got a $4 billion run rate for revenue in Q2. It's up 50% year over year. What's driving it? Can it continue?
Yeah, so we're seeing lots of momentum behind two of our products. The first one is called Databricks, and that product really helps you build agents that are helping out in the workplace to automate sort of work that you have to do, everyday tasks. And what's different here is a lot of the AI labs have been really focused on super intelligence, math Olympiads and programming contests. We're more focused on just everyday tasks that you need to do. And we're seeing a huge uptick in the adoption of this. So it's actually accelerating our revenue. And the second one is a database that we built called Lakebase, which supports these agents because these agents all need a database to store things in. And they use these databases differently from humans. So yeah, we're actually seeing, I've actually a long time been saying that, there's a bubble, that AI is maybe, overheated, but actually we're finally seeing the green shoots and some of these use cases actually taking off.
So we just talked about the research by Torsten Slok looking at the decline among major companies in terms of that investment into AI. Doesn't sound like you're seeing it. We also have been talking quite a bit about cash burn. Most recently, the disclosures from OpenAI and how much they're spending. You achieved positive free cash flow. Can that continue? And I guess to go back to this bubble question, do you think that we're starting to see this formulation of winners and losers and normalization as AI becomes more prevalent?
Yeah, I mean, so we were very careful with this. Should we also invest? Should we get insane number of GPUs and so on? And that's when we decided, no, we're going to run this like a public company, but in private markets. So that's why 12 last months, we were cash flow positive. And for a long time, I have been saying we should be careful. Let's not get overexcited about AI. I think there was an overpromise and people overinvested. And now it's kind of coming back down. But actually, the thing that's so interesting is that just now the actual use cases are starting to work and they're actually starting to get deployed. So interesting to see what happens with these expectations. Can we catch up with these production use cases of AI that are just starting to catch up? Or is it just there was too much excitement and people overspent?
Hey.
And there's going to be a correction.
On that, Ali, first of all, good to see you. It's been a while. But it seems before customers can get the benefit of AI, agentic AI, they have to have their data organized, tagged, managed. I'm hearing that is especially a challenge for larger and older enterprises that have lots of data silos from acquisitions, lots of unstructured data. How much of a bottleneck is that to AI adoption and monetization? How do you clear it?
Yeah, that's actually a great point, John. It's actually the governance of the data that's the problem. It's not like we can't access that data. That data is there. So why are we just not using it then for AI? It's because of privacy. Because at the other side of this, corporations are super worried about their most sensitive data. They want to be really careful who gets access to it. Is it going to get hacked? Are we going to have a leak? So that's also hampering access. So then how do you govern that data in a secure, safe way, in a privacy-preserving way? This is why we focus a lot on that at Databricks. We built a whole solution called Unity Catalog that just does that. And it's actually the number one sort of prerequisite before you can use AI. Okay. So that's the other side of this. That's what's holding back the AI because people are nervous about their data.
So let me get to this Lakebase product as well. Help me understand this conundrum that I see potentially with large customer adoption. There's some of your highest potential customers, but they're also likely to have databases they've been working with for a long time, like Oracle, which reports tomorrow, maybe MongoDB for some uses. Can you give an example with Lakebase of how the adoption cycle with large customers plays out, how you expect to gain share?
Yeah, that's an excellent question. For the last 40 years, this database market hasn't changed that much. The thing that has actually changed is in the last 3 years, we're now seeing it in our data. We tracked who's creating these databases inside Databricks. And for the first time, over 80% of the databases are being created by AI agents. So for the first time in the history of mankind, it's no longer humans. They used to be called database administrators, DBAs. They're not the ones creating the databases. It's a new customer. It's the agent. So we're really focused on helping them. And we think that's the way you can actually disrupt that whole database market. What's really happening in the market, John, is that previously enterprises were buying SaaS applications. And these SaaS applications could do all kinds of things with a system of record data that they had. But more and more what's happening now is that enterprises are saying, you know, we'll just vibe code using AI, our own software, ourselves. And that vibe coded software needs a database behind it. And it needs to be really good for the vibe coded agents that they're building. That's where Lakebase comes in. So I think you're going to see this trend more and more, not just about our Lakebase, but that in the industry as a whole, enterprises are building their own software in-house using vibe coding, because the cost of building software has just come down dramatically now thanks to AI.
Ali, before we let you go, you said you've been running the company like a public company. Any plans to IPO?
Well, you know, as I said, you know, if we were planning on long-term being private, we would have been burning 10 billion a year or something. So we're not doing that. So the fact that we're cash flow break even means that, you know, we want to run it like a public company. We have public company financial audits that happen. But we're not in a hurry also at the same time. We just have, there's so much demand for our software. Just keeping up in the Gen AI space is that, you know, we're not super focused on filing or going public or something like that right in the present moment.